It's 7:29. I've been at my desk for 12 hours. I've only done 7 trades. 6 were positive. I've only made £100 today, which is my physio salary. I could have taken many more trades that had 1 or 2 reasons, but I like 3 or 4 reasons. And it's not frustrating. It's in front of me. I just need to see it. Like I'm not doing my job properly. I've developed a system. It's taken me 2 years. It's not a system per se. It's a style of trading. I like buying on weakness when there's a change in momentum from selling to buying, which expects the price to make a turnaround. And I do so when that turnaround is going to happen at a price level that's significant from a technical analysis, psychological point of view, if that makes any sense at all. For example, in the pound to the dollar today, the pound was selling off, and the red and blue candles are price actions for 5-minute intervals. We can see that price is coming down to the low right here. But while price is making a low, you can see that RSI is going up for the first time in the day. We've gone from this blue area from oversold to not quite over. Well, it still is oversold. Anything above 30% is not oversold. So we're still oversold, but we've gone up from 21% to 26%. Now that's called bullish RSI divergence. It means there's going to be a reversal. And I've found that with weeks of backtesting that more than 5% is significant. And it's the first time in the day that it's done this. Now, and why is it doing that? Well, we're a little bit below this dashed green line. That's the support 1 pivot for the day. But it's only broken it by, say, 30 points. We're on this trend line here. That's the hour. On the chart for the hour, that trend line goes back to the 28th of January. That had 5 contacts to it. And this level here is the source support level from the day before. If we zoom out, we won't see those on that chart. We'll see them on a different chart because that charting package doesn't have that feature. So if I find my other chart, here's the same chart on 5-minute intervals. And if we change, we're on 5-minute intervals for the candles. And if I change to an hour, and then zoom out. We were looking at that moment right there in 5 minutes, but you can see that's on hours. You can see there's a trend line that goes here. It touches here and here a bunch of times. It touches here, the 11th of February, several times. It comes right back to the 28th and 30th. And the support level is right here. Can you see that my pencil comes back? So the low from the day before was the low for today. And it's up 70 points. And I missed it. And 70 points for me is like, I'd risk 2% of my account, which would be 80 quid. I would trade that with a 3 times average true range stop. So let's guesstimate that to be 20, say I don't know, 20. So 3 times 20 is 60. And then 60 divided into 80 is, let me get my calculator. 80 divided by 60 is 1.3. So I'd buy it at 1.3 pound to the point on a 60-point stop to make sure I'm not stopped out. And then it went up, like I said, 70 points. So 70 times it by 1.3 is 93 pounds. So I would have risked 80 pounds and made 93 pounds. But I could have done it with a tighter stop and made double that. But to be extra cautious, I like using 3 times average true range for my stop distance. So, this is trading. It's sitting at your desk for hours and hours, waiting for a setup, and then being a wally and not noticing it, or being a pussy and not taking it and then being proven afterwards that you should have taken it. It's not frustrating at all. Wow.